Hello and welcome to a very special episode of Gymwright Live. I am your host, Marcus Guerzi, and with me today is Mr. John Briggs of Insight Tax. How you doing, John?
Good. How are you?
Awesome, man. Pleasure to have you on. John is a very special person in that John is a CPA. He owns a tax and accounting or bookkeeping company called Insight Tax and Accounting. And what makes John's company so unique is that John, you guys specialize in helping CrossFit gyms basically become profitable, implementing the profit first system and really help them get their business on the right track. And that's pretty unique. I've worked with a lot of different bookkeepers and accountants and people in the space who may be good at their respective, role or trade, but aren't specialized in our gym and our business model. And there is something very unique about what we do and the people who run these gyms, and you've really specialized and niched down in helping our gym owners or gym owners in general become successful.
Yeah, that's what we've done. We've over the last 4 to 5 years ourselves to the cross community and industry, and we just enjoy working with them, and we've really found that it hits our philosophy, and it's been good. We work with more than 100 CrossFit clients, and we are looking to keep serving the community how we can.
Awesome, man. So guys, what we're going to be talking about today is the Profit First system. So first of all, let's start with Profit First is a book by Mike Michalowicz, who has taken a system which when you read through it seems incredibly logical in how he's approached this. But long story short, it's a book about how to become profitable in any business model. And we're going to break down exactly how that applies to the gym business today. So John, walk us through kind of what we're going to be doing today.
Well, we want to cover some basic things about cash flow. When it comes to the gym, the coaches and the affiliate owners, they understand things like the importance of a basic squat, right? I mean, that's probably one of the first things they teach someone that comes in. Well, as basic as the air squat might be to the foundational movements of CrossFit, cash flow is the foundation of having a healthy business that will be around for as long as the affiliate wants it to be around. And so we think cash flow is the lifeblood of the business, and we want to focus on some things that will help the affiliate owner find ways maybe that can improve their cash flow. Whether it's bad or good, there's always ways to improve.
Yeah, no question. And, to kind of zoom out here, would you mind walking us through the Profit First formula or method, just to kind of give someone, in case they haven't read the book yet, which, by the way, if you have not read it, go either buy the book or download it on Audible, get through it. This will blow your mind, especially if you're newer to business. This is a profound shift for most when they first go through this, but check it out. But would you mind walking us through just the overall Profit First system?
Yeah. So overall, if an affiliate's ever looked at their profit and loss statement or whatever set of books they're doing, generally it's organized in a way where you have profit minus revenue minus expenses equals profit. It's the same format on a tax return. It's the same format that's existed for literally, 2 centuries. I mean, or longer. Mm-hmm. The problem is that as humans, the formula puts our focus on profit or revenue and expenses. Mm-hmm. So profit becomes the afterthought. Well, the Profit First formula just flips that equation so that it's revenue minus profit equals expenses, meaning an owner can take a predetermined amount of profit and tell themselves, if I want to be in business, this is how much money I should be able to distribute to myself as the owner. Then that forces them to make the decision, here are my expenses, and I have to make that work based on how much profit I want to take. Mm-hmm. And it just, from human behavior, the method works way better than the old way.
Yeah, no question. And something that I loved in how Mike teaches the system is, the whole concept around Parkinson's law, right? So he uses the small plate example, and this basically, I'll read this off here so I don't butcher it. Author, historian Northcote Parkinson theorized that our demand for a resource increases to meet the supply of it. That is why when we are given 2 weeks to do a project, it takes 2 weeks. And when we're given 8 weeks to do the same project, it takes 8 weeks. That is why when given $1,000 to complete our work, when we get it done with $1,000, and when we give it $10,000 to complete the same work, it takes $10,000. So the profit first makes Parkinson's law an asset. So by taking profit first, the money available for expenses lessens, and we're forced to find ways to get the same things done for less money. So long story short, by making sure that you are setting aside profit and also money for taxes and really all of the key things it takes to keep the business and you as the owner healthy and with the ability to continue growing, and then saying, okay, well, what's left I'm going to use for expenses, we figure out how to get it done. Just like when you first started your business, you had probably next to no resources, yet you figured out how to make it work. Well, it takes that philosophy and says, all right, well, let's make sure we keep that mindset and run a leaner enterprise and make sure that our bases are covered so that we can actually continue to grow, rather than saying, well, look, we're making more money. That means we can finally add more equipment and do this and do that. The money will always be spent. We always find a way to do it. Just like how the person who's broke at $5,000 a month will be broke at making $25,000 a month, because they will always find a way to spend every last penny, because it's about the order of operations and what money goes where. And this is just a basic system that allows us to say, okay, based on these percentages, which we'll get into, I'm sure, we want to make sure X amount gets set aside for profit, X amount gets set aside for owner income, for taxes, and then we utilize the rest to get it done.
Yeah, and it's interesting. I think if anyone doesn't believe that that'll actually happen, Mike uses an example. I don't know why he didn't put it in the book, but he's used the example in other meetings I've had with him about toothpaste. If you think about the way we all use our toothpaste, when you open up that tube, you're not actually thinking very much about how much you're putting on your toothbrush, right?
Gobs and gobs. It's a brand new tube. I got plenty to spend.
Yeah, and then as you get to the bottom, what do? We get really creative. We start rolling the end. There's even like companies that exist because they sell products that help you get the most out of the toothpaste. Some people cut off the end. Some people suck it out. We become very creative when we have limited resources, and the profit first model forces you to have limited resources. It forces you to find the creativity so that your gym is as profitable as you want it to be. Yeah. It's amazing.
Yeah, it forces that innovation. And actually that example is in the Audible, by the way. So if you download the Audible version of the book, he gives that example. And that was one of my favorite ways of explaining it, because when you're right, new tube of toothpaste, you got gobs and gobs of it going on there. And at the end, you're squeezing out every last bit. And it's the same thing we would do with our finances. You'll figure out how to make it work. And it's an important mindset, I think, that should apply always. It's not just in the beginning. It should continue to apply. And sure, there will be room for other luxuries and buffer, if you will, but those are earned, right? And we want to make sure that we have our priorities straight. Another thing that I thought was really cool about this concept is it's not about changing your habits. It's about leveraging our natural habits, right? Could you explain that a little bit?
Yeah. So a lot of times what happens is a business owner, an affiliate, they want to make a change. And so then they go to, say, an accountant, and that accountant is going to sit down with them and they go, okay, well, what you need to do is you need to do your bookkeeping. And they start talking, you need debits and credits, and you need to categorize your equity and your balance sheet and assets. And they're using words and concepts that they're not familiar to someone who hasn't studied accounting. Right. And so the goal and desire to make the change is just killed, because all of a sudden there's this gigantic mountain of skill set maybe that the affiliate feels like they need to do. Profit First says, screw that. We're not going to do that. We've looked at how business owners operate, and we've figured out a system that will match their behaviors. So one of that ways is most of us as owners do what we call bank balance accounting, right? That's, okay, I need to pay a bill. I'm going to open up my checking account. I'm going to see how much money's in my checking account, and that's going to tell me if I should write this check or not. Or I want to see where my revenue's at, how many deposits did I get in the last couple of days. They open up their checking account. And so Profit First is a system that really kind of just helps you leverage that behavior of checking your bank account, as opposed to needing all the extra accounting knowledge that maybe a that maybe another like accounting professional thinks you need to have in order to make a change.
Yeah, it in essence dummy proofs it, right? It takes it out before you even really see it. And so what you see is what you can actually use in your OpEx account to pay your bills and all that. And it simplifies the whole process. And what's interesting is that when I read Profit First, I realized that this is a system that when I started my gym years ago, my business partner, who has a international tax law and finance specialist at a very, very high level, we were using this system well before I even knew about the Profit First book, where we had a whole slew of different bank accounts set up. Money came into one account that we didn't even see. That account was set up. It would then distribute out to our tax account, to profit, owner draw, and then into our variable checking and fixed checking accounts, savings account. We had everything broken out. I think we had 7 different accounts, and some were at the bank that we used, and the other one was at a bank that we didn't even use and didn't even have access to. We would only check it when it was like for our monthly and our quarterly is when he would basically log in, check it, note. And at first for me, that was the first time I had seen that system. And guess what? We built a very successful gym very quickly because we were always financially healthy. Even when there was not much to go around, it was still being divvied up accordingly and set aside ahead of time to where we had our taxes set aside well in advance, savings, always building off to the side. It was a pretty eye-opening experience for me as an entrepreneur to see that system in action and actually live through it. So when I read this, I just love how Mike puts it all into a nice, neat package. So I'm excited to explore this. So,
well, and that goes back to the Parkinson law because the way you're operating, you only saw a certain amount. The money was there in different things allocated to specific purposes, and you made the money that you were allowed to use work.
Yeah, exactly right. You figure out how to make it work, and that way you kind of don't screw yourself up.
Yeah.
All right. So question I always like to ask a guest. So why should a gym owner care about this?
That's a great question. And, I'm a pretty snarky person, so I'm trying to control some of my.
Let it out.
Yeah,
no. Friday.
When we come across an affiliate, hands down, 99% of the time, that person had a passion to helping people change their lives. We all know that by being physically fit, there's just more of life opens up to us. The issue is that affiliate owners typically don't go to 4 to 8 years of schooling to understand tax and accounting, or to sit down and how do I analyze financials? It's just that wasn't their passion, and rightly so. Only weirdos like myself find that stuff sexy. And so, with what we're hoping to provide for your audience today is, we want to bridge that gap for them between their passion for serving their community, for helping people change their lives, with the business side of understanding their cash flow a little bit better and maybe putting some steps into place that will allow them to kind of see how these cash flow changes will actually benefit their business and relieve the stress. Most of the affiliates we meet, a lot of them have the goal to leave their current full-time job and work for their gym full-time. But unfortunately, because the cash flow is not healthy, they have to have that extra stress with the job. And so hopefully these steps, I know the Profit First system, if someone implements it for sure, would get them to the point where they can get their gym so they can work for it full-time and work every day on what they're passionate about.
Sure, which is going to create a better product, better experience for members, which ultimately creates a healthier business, which means better careers for your staff and overall better impact. Positive snowball gets rolling. The reason why that's so important is because, most people, like you said, got into this because they were passionate about training, about helping people change their lives, live longer, healthier, more fulfilling lives. And because they don't have the background in business and they don't have the background, especially in finance, that they're just putting out, and the business, even though maybe it's growing, it's not actually healthy, right? And this goes to that whole revenue is vanity, profit is sanity concept, right? Which is because I've personally met with, because we consult with hundreds of gyms ourselves, and we'll get on the phone with someone, and initially they are coming from a place, I've got 200 members, and we have got $30,000 in cash flow a month, as if they're doing really well. But as soon as you pop the hood, it's like you're bringing in 30,000 and you're spending 30,000. You're barely taking a paycheck. You are not healthy. That's That's nothing to brag about. So a lot of the gym owners who are already in flight, have already been doing this for a few years, this can basically take what you're doing right now and find a way to make your business healthy almost immediately by implementing some of the things that you're going to talk about today, which I think is so important because so many people are working their butts off to make an impact and yet are not able to feed their family or even pay their bills. And there's this kind of like martyr mentality, which is unfortunate for the people doing it, because at the end of the day, not only are you going to burn out because you can't sustain this, right? You can't pay your bills. You're only going to do this for so long. And you're going to not only let yourself down and people who invested in you, but your staff, your members, the community at large. That impact you set out to make now goes away. So that's why this is so important to just put your guard down for a second. Profit is not a bad word. Profit is a positive thing. It's required to make your business thrive, not just in the short term for the sake of you taking a check, but for the long term so you can actually create those careers for future coaches, the next generation, and help to make an impact permanently in your community. So anything else you want to say about that, about why a gym owner should care about this before we move on?
I think the other thing is with these things, implementing a profit first system and cash flow management, you can literally increase your take home without having the need to bring in more members. And that goes back to the revenue is vanity, profit is sanity, because that's the how big is it question, right? Like, well, how big is it? It's like, come on, man. Like, seriously, if you want to have that conversation, let's look at the full thing. We see it too often. Yeah, we know gyms that, when we first brought on one client, he had multiple locations and total revenue was above $1 million. Mm-hmm. Well, guess what? His take home was half of what another one of our clients was, who's been with us longer, who only has $450,000 of revenue, total revenue, but he's taking home a lot more because he's had this system in place a lot longer. So it doesn't matter how, and I get it. You want to serve lots of communities, great. Open up more locations, but make sure each location's healthy. And if you do that, this whole stress of, I got to get more members in, and what's the next event that I should run, and there's this desperation aspect that comes from that you don't need when you have the right cash flow rules in place for yourself.
Sure. Yeah, guys, this doesn't have to be painful. This can be a positive experience. Being a business owner, like I said, there's this kind of assumption that this is going to suck and you're not going to make any money and you get paid last. And there's all of these like anecdotes that float around the business owner or the new business owner realm, if you will. And this is rampant in the fitness space because almost everyone is a first-time business owner and doesn't have any experience going into this. So a lot of this stuff is kind of assumed to be normal and you just have to tolerate it. This is not how it has to be. You can run a healthy business and still make that impact and be happy and feed your family and buy a house someday and move forward in life. I think that's a really important part of being in business, is that there has to be rewards for the efforts you're putting out. You're putting out such an immense amount of good in your community every single day to these people. You need to be able to live and thrive, or else, like I said, it all goes away. So, all right, so let's dig into this, into the what and how section here. So, if someone's watching this and they're like, all right, this sounds pretty interesting, where the hell do I start? What's the first step?
The first step is you have to understand where you're at. Just like when a new member walks through your door, you're going to do some sort of evaluation to see what they're capable of, whether that's, hey, let's do a WOD together and let me see your movement. This is kind of, what are your financial movements? Where are you stiff? Do you have good full depth on your squat? Do you have shoulder mobility? It's all the same concept when it comes to where are you going to start? We got to understand where you're currently at. And so in the book, there's an assessment that he talks about, and there's a couple versions. He has what he calls the instant assessment, which again, get the book. It's pretty straightforward. You can, the idea is you can do it in 10 to 15 minutes by plugging in some numbers. But then there's a more full assessment that obviously we like to help people run. But that would be the first start. And I know we might talk about this at the end, but we have a 5-day challenge. It's free to anybody. It basically breaks up the instant assessment in a little bit more detailed fashion than what the book talks about.
Mm-hmm.
Just 10 to 15 minutes commitment every day for 5 days in a row. And at the end, you have your assessment so that you can see where you're at, where you're starting from.
Which, by the way, I'll just give you a little nod here. I went through the 5-day challenge, and you guys did a great job in making it really simple for someone to go through this process, because I know in working with gym owners, this can be a pretty painful exercise. If you're not guided through it well. You guys did a good job. So if you're watching this, we'll give you the link. The link will be in the show notes. But check out John's 5-day challenge. It's killer. So it'll give you an instant snapshot of where you're at. And you do a nice job of taking people through it. So nice job. And by the way, if you guys are watching this live, or not live for that matter, you can start putting comments in or questions into the comments below so that we can answer them towards the end of the show. I want to make sure that while we have John on today, if you have questions, start popping them in here. We may answer them as we go. We may not, and then we can answer them at the end. But there is a bit of a delay here in the show versus the actual what you guys are seeing. So start popping them in now to make sure that we see them before we get to the Q&A section. So anyway, let's jump back in. So step 1, assessment. Figure out where you're at. What's next?
Okay, well, so it really then becomes breaking down that assessment and understanding some things. The first one is we want to make sure we understand the difference between our total revenue and our real revenue. And I actually love that Mike emphasizes this in his book, because it goes back to the conversation we had about, well, yeah, I have $1 million in revenue. Well, great, but you pay $1.2 million to your team to coach those people. So your business is already crappy, you know? Mm-hmm. So total revenue is literally payments from members. That's my total revenue, yep. Period, right? Gross revenue. And we recommend, from a cash flow standpoint, have a separate account where all your income goes into, and that's the purpose of that account. It makes divvying out your cash flow to the specific purposes that you're going to identify later mm-hmm. much easier. So keep that in mind, affiliate. You're going to want some separate accounts here. One of them is specifically for income deposits. Okay, so that's total revenue. Real revenue for an affiliate is, okay, what did I pay for the supplements and the apparel and whatever other items I'm reselling to members? Mm-hmm. That's a cost of goods sold, or the book calls it a material or subcontractor payment. So we want to take that into consideration. So that's going to go into this expense bucket we'll talk about. And the other payment is if I'm paying coaches per class, whether that's on a 1099 or a W-2, we don't care about that classification for this purpose. If I'm paying a coach per class, meaning I have revenue for the class, but I also have a direct expense to it, I need to take that into consideration too. So payments to coaches per class, what I paid for the stuff that I'm reselling to members, we subtract that from total revenue, and that gets us to real revenue. Mm-hmm. That's the true size of your business. So if I have $1 million gym, but I'm paying my coaches per class and their cost is $300,000, my business is actually a $700,000 business, not $1 million business. Mm-hmm. And that distinction is really important because you don't want to act like you're $1 million business and spend money like you're $1 million business when in fact you're only a $700,000 business. Right.
That's the whole vanity thing, right? Like, are you kidding me? My gym brings in $1 million a year. It's like, yeah, it costs you $1 million a year. You're not making anything. It's nothing to brag about, right?
Yeah. Okay, so that's that next step.
Okay.
The next thing to think about is understanding the difference between the time I spend working in the business. Maybe I'm coaching classes. Maybe I'm serving the role as a janitor and cleaning the floors at the end of every day. Maybe I'm marketing. I'm working in the business there. Versus I own the business. I'm taking risk for owning the business, and I should be compensated just because I'm the owner. So those are two different concepts. And the book breaks that out into the concept of owner's pay, which is payment as the owner, but it's because I'm working in the business. And then profit distributions, which is my reward, my compensation for having equity in the business. Right. And those are separate things, and you need to calculate them separately.
Right. I think it's important I want to break that out a little bit, because this is an important topic we talk about with our clients as well. In that, when you first start a business, usually you're doing everything yourself, right? You're wearing all the hats, and you're doing it because that allows you to do it for quote unquote free, right? I'm doing it. It doesn't cost me anything to do it. The challenge is that as you start to grow the business, more often than not, that the gym owner, although you may not be doing all the classes anymore, you've got some coaches helping you out, maybe you've got it worked out, you've got someone cleaning the gym, but you're still energizing a variety of different roles. And if you're not accounting for that separately as a line item, you will not eventually be able to pull yourself out or replace that role. And if you look at your revenue, you're not going to get an actual accurate snapshot of what you're bringing in and what it costs to run your business. We need to compartmentalize these different roles, assign a value to those roles, those jobs. If you choose to energize that role and take that job, you get paid for that job as if you were paying someone else to do it. Now, oftentimes the immediate knee-jerk reaction is, well, the reason I don't pay someone to do it is because I can't afford to do that. That's okay. The business can owe you. You can track what the business technically owes you for filling those roles. But the point is that you're accounting for it, and that you're being realistic about what it actually costs to run the business. And because you're energizing those roles, you can get compensated. And this is where you can then have your owner's compensation, right? The jobs that you do. But that's different than the profit of the business. Those are not the same thing. So that's why a lot of people are running their business and thinking like, well, check it out. I'm pulling home, more money than I've made before, but you're killing yourself doing 5 different jobs within the business. That's not sustainable either. And that doesn't mean that the business is necessarily profitable. So it's an important distinction to understand the different roles within the business itself and the profitability track. These are different tracks and different income streams.
Yeah, and on that note too, we see this often. The gym owner wants to step away from some of those roles, but if they're doing kind of what you just broke out, like what's the market value? What would I pay someone to do this specific task? Mm-hmm. They got to track it. They got to know.
Right.
That way they do know, well, actually I can't afford to pay myself market rate for this. Well, then don't hire that coach, because that means you're not ready to hire the coach.
Exactly.
Certainly once the business is healthy, leverage money. It's a great way to grow the business. It's a great way to free up your time to do the higher level things that really the passion of the owner will allow you to do better than anyone else. But yeah, we see a lot of affiliates hire their first coach too quickly. And then they're wondering why they don't have money to pay the bills. Well, unfortunately, your business isn't at the point where it can outsource the coaching yet.
Yeah, or even worse, expanding too quickly. That's been the killer I've seen more often than not. Well, we've got more bodies coming in, and we have an opportunity to knock down the wall next door. Let's expand. It feels good. It feels like there's forward motion. It feels like the business is growing. But if you are applying this framework to your numbers, more often than not, it's not actually appropriate yet, and you sink your battleship on accident ahead of time. Okay, so now, so what's next in this process? So we've gone through the assessment. Now we've designated, okay, we've got our income account, and then we have our operating account, which is then distributing out. Can you break out a little bit of a starting point for someone to saying, well, what are the percentages? So we've got caps, taps, breaks this all out in the book. Can you break this? Can you simplify that here and apply it specifically for a gym owner? Maybe what's a good starting point?
Sure. I'll try my best. So in the book, he talks about TAPs, which are target allocation percentages. Those are the goals. Mm-hmm. And when we're talking about what we have goals with, it's the different money buckets, which is represented by a separate bank account, which is generally a savings account. So most of your banks aren't going to hit you up with extra fees, and your accountant shouldn't charge you a bunch of extra money, because these other buckets that we recommend you set up don't have a lot of transactions in them. It's just, I've designated this money, I'm setting it aside. That way I don't steal for myself. Mm-hmm. So I mentioned you want to have the account for income. you want to have an account for profit, and you want to have an account for taxes. Those, based on our experience with affiliates, you have to have at least those three. And then, of course, you have your normal checking account, which is the current one you're using. You're not going to change that one. And then depending on how the owner wants to do it, we sometimes recommend or don't recommend setting up an owner's pay account just because, and we'll get into kind of the mechanics of how you allocate it. But when you sit down to allocate things, if you're just allocating your owner's pay directly into your personal account, whatever that percentage is, you don't really need a holding bucket for that because it just goes straight from your income account into your personal account. Like for businesses like myself, it makes a lot more sense because we have 2 seasons where there's just a gigantic influx of cash, tax season and extension season. Okay, so you have those different accounts set up. When it comes to profit, we recommend let's just start small and let's establish a behavior. Let's start at 1% because anyone can afford to put 1% of their real revenue into a profit account. So that's what we recommend with profit. Taxes, as a general rule, most of our affiliates are saving 5 to 7% of their real revenue, and that's sufficient for taxes. Now, I'm not giving a plug for ourselves, but we are phenomenal when it comes to tax strategies. And I understand that sometimes if an affiliate has a different tax person, they may be overpaying in taxes and 5 to 7% might not be enough. But for our clients, 5 to 7% is totally sufficient. With owner's pay, often we have to the book has a table and based on your business size, there's certain percentages. Very rarely can an affiliate go straight to that percentage. And so the first thing is the affiliate, you need to sit down and kind of just look at what's the absolute minimum amount I need to take from the gym every month to sustain my life. Now, often we have that conversation with them, and there have been times we have to point out very carefully that the lifestyle may not be ready yet based on the health of the business to have those expenses.
You mean I can't drive a new Range Rover with my new gym?
You can, but you're not going to serve your community for very long.
Yeah.
Yeah. So you have to be smart about that. So that definitely, there's no standard number there. It just comes down to what does the owner need, what to make them feel comfortable. And if it is too much, we have that conversation with them like, okay, let's dig into your personal stuff just a little bit. And then everything else in the meantime goes into operating expenses.
Awesome. So he mentions in the book, or I'm not sure if this was just in the Audible as well, but basically when you first set up these accounts, you're going to set up your the accounts at your current bank, right? And your existing checking account becomes the operating account because you probably already have all of your bills coming out of this as it is. So you keep that as your expense account. You set up the new account for income. You set up your new account for taxes. And what's the framework you use for a gym when they're first getting started? So OpEx is the current expense account, which is the current checking account. Then we're adding what exactly?
So then you're going to add a savings account for profit, a savings account for taxes, and you're going to set up another account for income. And that can be a checking or savings. Most merchant processing companies will happily deposit money straight into a savings account. So those are going to be the ones for sure you want to set up in the beginning.
Right.
And actually, we do recommend another one. It's very specific to affiliates, which is an equipment account. We don't actually suggest a percentage. We just suggest a flat amount every time you sit down, $50 to $100. Just plop it into that equipment account. You know the equipment's going to have to be replaced or repaired at some point.
Yep.
As members, we're very brutal to the equipment. So, but those are the basic ones. And then if you want a gold star, you'll actually find a separate bank account or separate financial institution that is probably kind of a pain in the butt to get to, and you'll open up a profit account there and a tax account there, with the idea being the profit account, you're only going to distribute to yourself once a quarter. tax account, you can make quarterly payments, or it just sits there all year. Well, over the course of a year, that money's going to grow, and it becomes a bit of a temptation sometimes when money's tight. And so in order to save yourself from stealing from yourself, put that in the other account so that it's kind of out of sight, out of mind. You remove the temptation. Like for me, it's the idea of, no, I cannot have Oreos in my pantry or I will eat the sleeve. So in order to avoid it, let's not have it. So I can't see it.
Yeah. So just to clarify, the first set of accounts that we set up, the income, operating, tax savings, profit savings, these are at, let's say, your current account. So if you're currently banking with, say, Wells Fargo, you're going to set up those accounts at Wells Fargo. But then these other two accounts, the Gold Star accounts, this is your tax holding and profit holding accounts. You set up at the other, a different bank, a different institution. And ideally, set it up so that and the reason you do it at a different bank is, for one, you don't see it into the account that you're logging into on a regular basis, but make it difficult for yourself to access this money. And he gives all sorts of different examples in the book. But we, like, for example, what we did, my partner and I, is we didn't even have online access to that. We literally had it set up an account and said, okay, we're not even going to set up the online banking. We have to go drive to the bank in person to go get the money out of it. And this, as much as illogical as it may seem to make it hard for yourself, like you said, the whole point is just to avoid temptation. It's out of sight. It's out of mind. What I have is what's right here in front of me. This money is set aside. And then when you sit down to do your quarterly distributions and make your quarterly tax payments, or however you do it, then you visit this and you say, okay, cool. How much do we have? And it's this magical pile that you have now.
It really
that
is.
You've been setting aside for yourself on the schedule that now you can use, and you make sure you have all of your bases covered. And it is just such a nice feeling when you check this account and you're like, holy shit, we've got 20 grand sitting over here. And the beauty is too that, and this is what the biggest takeaway for me in this system is that we were always a little overly cautious with what we set aside for taxes. And the point of that is that we never actually had to pay that much. So then we would take that and we would transfer it into the profit. So our profit account would actually have like a 20 to 40% bump based on what we had set aside for taxes, because we would also want to work with a good tax professional who would actually help us minimize our tax liability so that we would then pay as little tax as we had to. And then the rest would go into the profit account. So we would actually make more than anticipated. So it's a really beautiful thing when tax season is a good season, which for most, it's a nightmare because you're scrambling to have to, how do I pay this bill? And I used that money to, buy those new rowers 3 months ago. I shouldn't have done that, but we needed it. And, no excuse. You figured out how to make it work. Now you've got the money and now you can treat yourself. And the point, or an important point, I think, is that treat yourself. Give yourself a treat as an owner for having busted your ass and risked putting this thing together and coming in, doing early mornings, late nights, weekends to make it happen. This is your ability to now thrive and reap the rewards of the hard work that you did. And don't give the excuses of like the plowback method and everything just into the business. You can grow the business through what it's bringing in. So anyway, I digress. So
two more things I want to talk about that though, because it makes the model, it's one of the benefits of the model is, as an owner, your bulk of your tax burden is coming from the business. Doing it this way forces the business to pay the taxes, not coming out of your personal account. So when you actually take that money home for your owner's pay or your profit distributions, you don't have to set aside money from that to cover taxes because the business is already setting it aside. And I think people may not totally appreciate the stress that happens subconsciously of worrying about what am I going to owe for taxes? Because without a system like this in place, I know you're doing it as the owner, right? Oh my gosh, I don't know I haven't looked at my numbers. I don't know what I'm going to owe. So hopefully I have enough. And this way it's your tax guy says this is how much you owe. You go to your account, you look at it, you're like, oh my gosh, I already have the money. This is glorious.
Yeah. And that's a really, really important point in that this system, it sets it up so that the business pays your taxes as an owner. I repeat, the business is going to pay your taxes. It's not coming out of your personal income. So the check that you're taking home every 2 weeks or however you're paying yourself, that's your money to live from. It's not, great, I've got to set something else aside now and hope that it works out and hope that I don't spend it, which again, if you have it, you probably will. Especially when it's really easy to justify spending it on something else in the business or getting that additional help or buying that additional equipment, then you find yourself up shit creek. And then now when you come to tax time, not only is the money there, but the money is coming from a business account to help pay for this. And that's such a huge shift for most, because I don't know many gym owners or any that don't know about the system where the business is doing that. And like you said, the cognitive load of having to think about, what am I going to do with tax? How am I going to pay for taxes? How much is it going to be? I'm not sure what to do. That sucks. That you may not be giving yourself, you may not be acknowledging how bad that is or you may not realize how bad it is until you relieve that. It is a crazy good feeling when you realize my bases are covered. And when it comes time for taxes, it's probably going to be bonus time for me.
Yeah.
Good stuff. All right. So, now we've set up the accounts. We've got money distributing. Where can someone start in regards to saying, okay, well, I set up these accounts. I get the concept. Money comes into the income account. I'm going to then distribute it into these different accounts, right? So can you kind of walk us through like how someone would actually now implement this, right? So the concept sounds great. How do they actually apply this?
Okay. So you want to sit down, and we recommend scheduling this as if it's a life and death appointment twice a month. Mm-hmm. The book suggests the 10th and the 25th. We've found from practice, the 10th and 25th doesn't really matter. And in conversations with Mike, it's a suggestion. The idea is they're equal amounts apart, so about 15 days apart, 2 weeks apart. Mm-hmm. If you're doing normal payroll on the 5th, it might be more convenient to do this on the 5th, but regardless, set aside your time to sit down twice a month, and we call them allocation days. And so let's say I'm doing it on the 10th. I'm going to sit down. I go in. I'm opening up my bank account. I'm going to open up some information in maybe my accounting software or Wodify, whatever we're using to track some of my material costs. I'm going to calculate my real revenue that happened in the previous time period. So if the 10th and 25th were my days, then I am going on the 10th, if I'm sitting down, I'm going to look at the money that was deposited into my accounts between the 25th and the 9th. So I'm going to look at all that money. I'm going to look at all that. I have the income that's deposited. I'm going to calculate, well, how much of this was material subs, whatever. I'm going to move that directly into my owner's pay account. I'm going to move that directly into my operating expense account because I know that those are costs that are going to come out. And then I have my percentages, right? You have your current allocation percentages. So whatever that percentage is, we recommended 1% for profit, let's say 5% for tax. I'm going to take 1% of that real revenue, shift it into my profit account. I'm going to take 5% of my real revenue and transfer it from my income account into my tax account. If my owner pay percentage is 25%, I'm going to take that, transfer it to my owner's pay account or my personal account. I'm going to take $50. I'm going to put it into my equipment account. And then everything else, I empty my income account so that it's now zero. I shift everything in to my operating expense account, OPEX. Mm-hmm. And then on that day, I'm also going to sit down and look at my bills. So I want to come back. I'll come back to that because for me, that was the biggest. I love Profit First just for that alone. So then let's fast forward to the 25th. I'm sitting down on the 25th. Now I'm looking at what happened between the 10th and the 24th. And I'm going to do the exact same process. What's my real revenue? Then I'm going to shift the percentages, 1% to profit, 5% to tax, 25% to owner's pay, $50 to my equipment account. And literally, now I have the habit, right? Just like we have our exercise habit. Mm-hmm. Twice a month, I'm doing this. So that's the practical way. That's the bread and butter of the system. That's where the rubber meets the road. That's where all these concepts actually get into play, is when you sit down twice a month to actually allocate the money. So anything about that I should probably clarify before I talk about paying bills?
No, I think that was good. Go ahead.
Okay. So a lot of times as owners, we can stress out about bills because we get the mail, we open it up, oh crap, a bill. I put it somewhere and now I'm worried about it. Or maybe it's like, oh, a bill, okay, I'm sitting and I'm going to take the time right there. I'm going to write the check or I'm going to get online and pay it. Profit First says, no, stop wasting brain energy and any sort of physical energy or mental exertion on worrying about your bills. You get your mail in, open it up, fine. You make a pile for your bills. I just have this thing over here on the side of my desk. All my bills go in there. And so that I literally don't even think about it. I don't worry about touching it. I'm not stressed about, oh, I wonder if there's enough bills in there that I don't know if I can pay for all of them. Nope. I'm focusing on running my business. I'm focusing on my passion. And then when I sit down on the 10th, then I pull out my stack of bills. And I'm going to look at my bills and I'm going to sort them. Okay, first anything that isn't due until after the next time I'm going to sit down, I'm not worrying about it. Setting it aside. It's going to be in my list for next time. Anything that is going to be due, but that's due now or, between now and the 25th, I'm going to look at it. And this is super important because it helps us understand our cash flow cycle. Mm-hmm. It helps us understand where does income come in during the month? Where are my expenses going out during the month? It also forces us to have the realization, if your business is at a point where it can't afford all your bills, this is the mechanism that forces you to see that reality, which is super important. Because then if I'm in that scenario, I'm looking at all my bills, and I'm a geek, so I actually list them out in Excel and add them up and look at how much money I have available in my operating expense account. And if I don't have enough for that, now I have to look at all my bills and say, okay, which ones are the ones that are absolutely necessary for me to stay in business? And now every time I sit down, I am able to cut the fat out of my business because I can say, I don't actually need this second Spotify subscription. The other music subscription I have is totally sufficient. Why am I paying $10 a month for this? Okay. I'm going to pay my bill and fulfill my obligations at some point, but that's going to get moved to the bottom of the list. Mm-hmm. Paying rent. Yeah. Okay. I kind of need to do that in order to stay in business. That's the top of my list. And so you just kind of filter it, and if I only have enough money to cover the first two that I prioritize as the most important, I'm going to pay those. Depending on how past due I am, I might have to get on the phone with that vendor or the person I owe money and say, look, I have the bill. I need another week or so to pay it. And you'll find as you do that process, it's a automatic way to wean out expenses that you don't need. Mm-hmm. That $10 a month, that's going to, from the second Spotify membership, whatever, and I use that as an example because a common thing we see with affiliates is they have a lot of small subscriptions, and those subscriptions provide overlap, and they don't need the overlap. Mm-hmm. It adds up. And that's money now that I can potentially take as profit, or I can put into something, maybe it's another revenue stream, whatever. It's money that's available for me to use creative innovation with instead of just wasting it. Mm-hmm. So that's the method that Profit First suggests you use for paying bills. And again, it's so glorious. I cannot tell you how many expenses in my mind I justified. Obviously, I justified them because I committed to paying them when I took on the charge. But now it forced me to see, I actually don't need that expense. It's not adding anything to my client experience. It's not helping my team members at all. Why the crap am I paying that? Mm-hmm. And so then I could just eliminate it. Now my business is healthier.
Yep. Awesome, man. So if you have any questions, guys, go ahead and start popping them in. So we can address them here while we're live. If not while we're live, just put them in. We'll address them after the fact. So John, and it looks like the screen may have frozen on your end. Oh, audio's good. We've got looking off into the sunset, freeze frame. But anyway, so guys, if you're watching this, and you're thinking to yourself, I don't even know where I'm supposed to start with this, just start somewhere. start by reading the book, understand the concepts. Implementing the basics is already going to make a huge difference in how you feel about the finances, about your business, and just overall sanity in running your business. It'll give you light at the end of the tunnel. John, anything else you want to add to this before we move to the end of the show?
No, it's a lot to take on. And as I've started taking on a new journey myself with trying to improve my nutrition. Mm-hmm. And I understand that I can't change everything overnight. I got to take it one step at a time. So be patient with yourself as you make these changes, but do something to make a change. And again, the 5-day challenge is designed to help any affiliate at least get their foot walking in the right direction. Mm-hmm. It's important. So focus on your cash flow.
Yep. And if you're listening to this and you're thinking, this concept sounds amazing, but I'm a little intimidated. I'm not sure if I'm equipped to do this myself, or, I'm going to be able to follow through on it. I highly encourage you to hire someone like John. There's a whole group, Profit First Professionals. John and his team are master level. So they are in the top category, or the highest ranked version of those Profit First Professionals that can actually help you implement this. John, I know you've worked, like you said, with well over 100 affiliates at this point, and helping them implement this system to basically go from broken to fixed and healthy and thriving. And I can say personally, I have not even one time encountered a gym that has tried implementing this system that didn't say it didn't completely change their life. And by the way, that doesn't apply just to gyms. It applies to anyone, consulting business, software business, laundromat business. I know a lot of people in a lot of different categories who have applied this, and 100% of them say it completely changed their life. So if you're listening to this and you're thinking, I want to implement this, but I'm not sure where to start by going through the assessment. We'll put the link again into the notes, but contact John and his team. They can actually walk you through this process and take you from regardless wherever you are, and get you to a healthy place so that you can actually get on to a positive track with your business and start getting the business healthy. And again, this doesn't matter if you're brand new or you've been around for 10 years. Applying this framework can give you a lot of, first of all, just understanding as to what may have been going on, but more importantly, show you how to actually fix this and move this in the right direction. John, I always like to end the show with asking you, what one piece of advice, would you give to a gym owner? What would that be?
One piece of advice. Man, there's so many good things. Just give respect to the accounting and cash flow side as much as you do the technical actual service that you provide to your members. It deserves that much attention. And when you do, you'll find that everything in your business, the services, the quality, the culture, everything improves. We truly believe the cash flow is the foundation of a financial pyramid. And it deserves the affiliate's attention. Awesome.
Where can people find out or find more about you? Where can people follow your stuff, get more information? Let's start with, we'll start with the link to the challenge.
Yeah, so you can go to the link. It'll be in the show notes. Our website is insighttax.com. You can email me, john@insighttax.com. We have a Facebook page. We're trying to be everywhere. So if, the website and email and the challenge is the best part to start, because you take action. It'll be good.
And that's just so in case you're only listening to this on audio only, the link is www.casheskinguniversity.com/5-day challenge. That's 5-day-challenge. Again, link will be in the show notes here in the network on our blog. So you can just click through, do the challenge and do the assessment, see where you are, and get in touch with John. He can help you out. John, I don't have any questions in the queue here live, so we'll just address them here after the fact. So just tag John or myself in the comments We're happy to answer any questions you have. John, thank you so much for being on the show this week. And a ton of value to our community. Thank you. Thank you. And everyone watching, thank you for joining us. And we'll see you again next week. Bye-bye.